Good morning, legends. Well, nice bounce that we had on Bitcoin last night after a dramatic drop last week. I hope that from my last video, you guys took profit in the boardroom and did not give all of your profits back to the market maker. Now we're going to get deep into Bitcoin price action today on this video. As a quick note, I just want to point out, whilst this candle was actually playing out, I am on the weekly time frame. This channel I saw all over Twitter looking like this, and many traders saying we've broken the channel. We are now going down to $20,000 Bitcoin. In my opinion, we never broke the channel because these 2 weeks here create the bottom trend line. We are still within the channel. Yes, overall this looks like a big bear flag, but when a pattern is too obvious, it rarely actually plays out. But we're going to go and have a bit of a deeper look into Bitcoin on this video today, take a general look at all markets, and I'm just going to give you my honest opinion. We're going to look at liquidation. There is a big liquidation lesson to teach you today. So if you like good, honest TA that is not going to shout, pump or dump, and you just want to know what is genuinely going on in the market, then this is the channel for you. If you are new here, welcome. If you are returning, welcome back. If you haven't already, don't forget to hit that subscribe button. Turn the bell notification to all so that you can be notified every time I upload a new video. I do 3 market updates a week, and every now and then I throw in a tutorial on something that will help you slay the trading game. Also, you don't have to like this video right now, but if 5 minutes into this video you're enjoying the content, don't forget to hit that like button. Now let's take a look at the general market overall. So this here in the top right hand corner is Bitcoin, and on my last video I had mentioned that we had now dropped below the center line of this channel, and even if price shoots up from here, we now have to be careful of a rejection of the center line here, because that could take Bitcoin back down. Price is not close to there yet, and it may not even get there this week. So this may not be a this week problem. It's just something to watch out for as you're taking shorter term trades. This is on the daily time frame, so we will take a look at lower time frames and see how likely we are to actually make it back up to that dotted line. Ethereum initially broke this level. However, if we move this daily trend line up to this resistance now, you can see here currently we have the perfect bounce. So Ethereum had this downtrend going on, broke out of that, and at this point in time, all it's done is come back to retest the previous high. So that's actually looking pretty positive. The fact that we've got a nice wick on that daily candle, there's still an hour and a half till it closes, but so far so good for Ethereum. And if you didn't catch this breakout and you're someone who dollar cost averages into Ethereum and is interested in holding it long term, this is a good spot to do that in my opinion. USDT dominance is something we always have to watch very carefully up here in the right hand corner. This area that I've circled here was where price was bouncing for a number of days off the support, and we were waiting for that bounce to see if we pushed up, that wasn't going to be good for crypto. If we broke further down, it would have been. And you can see here as the USDT dominance pushed up, that is where Bitcoin and Ethereum fell down. Now we have the opposite problem where we're now, well, it's not a problem, it's actually great. We're now watching this level here where the monthly resistance is, and prices held there for a number of days. The current candle looks very good with a nice big wick to the top. Again, still have an hour and a half for this candle to close, but if we're to assume that Bitcoin will continue up from here, we want to see this USDT dominance start to come down. So that's definitely something to keep an eye on. Down the bottom we've got gold, which is just doing what gold does. There was a previous resistance here, and it looks like at this point in time it's trying to make its way up. The current candle does look like there's a bit of weakness in gold, which is something to keep an eye on, but it could just come back, create a higher low, and then continue on. So not too concerning just yet. S&P is doing a nice retrace after this push up. I don't think there's anything to worry about here. If we draw fibs on that, you can see at this point in time it's just a 50 level pullback, and so that's healthy. The Dixie is charging. Now what I find very interesting is that the Dixie is moving up, and so is crypto. There are a lot of traders out there who say that when the Dixie's up, Bitcoin can't shoot up, but well, we did yesterday. So not sure if this little push up here on Bitcoin and Ethereum is going to continue, but it's just very interesting to me that the Dixie is up, USDT dominance is down, and in the last day Bitcoin and Ethereum are up. So let's find out on lower time frames if this little push last night is going to end up being a fake out. Okay, so let's take a step back before we take a step forward. So over the weekend, we had a public holiday, so we had a long weekend with the Easter break, which sometimes can throw the model out and it can be a little bit tricky to trade. Now, zooming into this area here, this was the weekend. So this was the move out that we caught before the weekend, and this was where I did my last update. In that update, I said don't hold your trade through the boardroom, which was this period here of consolidation, because when price moves in a direction and then goes into consolidation, there's no guarantee that it's then going to take the next leg up. So it's important that you always take your profits if you have a good trade that's hit your target. Now, for those who did take their profit here, they would have been fine, but those who thought that they were going to ride, a wave up from here would have got wrecked, because price came right back to the ideal entry. Okay, so on the 1 hour time frame, this is the area that we're talking about. Now, what happened from there was we went into Good Friday and the long weekend for Easter. This put us into an extra long weekend trap. So you can see here, if I mark out these levels, price stayed between these two levels of 40,000 and 40,500 for an entire 3 days, and see all of these wicks up here. These were tests done on purpose, designed to hurt breakout traders. So breakout traders take entries at the breakout of resistance or the breakdown of support. So these wicks are formed because people open long positions here. Now, when you see wicks to the upside like this, it's an indication that price is going to reverse. The wicks show in the direction that price is likely to go, meaning if these wicks at the top are pushing price down, it's likely the market maker is going to move price down out of the zone. If we saw big wicks like this all at the bottom, it would have been likely that price was going to push out of this zone to the top. So what happens here is we've got all of these tests here that are inducing people to open long positions, and then the final confirmation that that's what they're doing is when they do the test to the downside. Now, this is designed as a stop hunt. So people who open long positions here potentially at worst would have had their stop losses under here, under maybe this week or under this week, or somewhere within the zone, which is a badly placed stop loss. And this wick here took them all out. So this wick allowed the market maker to grab all of the liquidation levels, all of the stop losses from people who longed in these wicks and held. And now this wick gave the market maker that liquidity to then be able to short the market, drive price down. Now, this happened yesterday, and this was fake move Monday, in my opinion, because what would have happened was people who got this wrong, or people who don't look at charts on weekends and just came in a fresh new week, when this was happening right here, retail traders would have matched this up here as the previous support. Looking left, it held there a number of times, and they would have seen these 2 wicks here to the bottom that bounced right off it and thought, that's a bounce off support, I'm going to open a long position. So that's fake move Monday there, in my opinion, and then price fell right through. Now, it just so happens that this fell right as the news came out of the China GDP. And here's the thing. So yesterday was still a public holiday in the UK. So we only had the Asian session and the US session to move the market. And usually the Asian session is just setting the high and the low of the day. So it's usually just a consolidation period and nothing that much happens. Considering we had a UK market close, it made me suspicious that we were going to get price action in the Asia session because there was a news event. And when there are news events, the market maker will shift the zone to be able to use that news as the excuse to send price where they were going to send it anyway. So I actually did an update about that on my Twitter yesterday before the news was to come out, and just warned everyone that the UK market was closed. Asia time zone might get to make the move for once instead of being the boring consolidation zone. This might be the news they use as an excuse to move the market. Keep an eye out, but beware of fake moves. And that's exactly what happened. So that GDP news came out and price fell. Now, what happened here when it comes to leverage levels was shocking. Let's take a look at the high block chart. In high block, see these big, huge circles here? Once that price dropped, that's when people opened short positions during the actual drop, which is crazy because that puts you at such high risk of being liquidated. Now, I did a full video on how to use this high block chart and exactly what everything means on here. That is the video before this. this. So if you're wanting to understand high block at a deeper level, be sure to check that out. But at a glance, just look at this. We had the delta to the shorts at a relatively low level throughout this entire Easter weekend. There was really nothing to report. We get that drop, and during that drop, that entices $11 billion worth of short positions at risk of being liquidated should the price turn around. And then these huge circles show where most of that capital is at risk. And so if you look at the highest level here, it's 40,270. Now that's not a big move from where price was at the time for Bitcoin to move up and take all of that out. And that's exactly what happened. If we go back to the chart, 40,270 is here. So all those people who shorted during this candle got liquidated when the US session started and reversed price. Now, when I noticed that, I actually did an update in our Discord, and this was the update. Ignore the language. I'm very comfortable in my Discord. But here, this is the part to pay attention to. That is $971 million worth of short positions opened with liquidations up to 40,270. That 971 million is just in these three circles here. So you've got all these other little circles as well that would add up to even more than that, right? And then I wrote this: when this thing turns, I reckon it's going to be swift and hard. I'm going to start looking for W formation longs at any drop. I don't care how long Bitcoin goes. It may keep going to bring that delta higher, but the juicy move that pays the big bucks is going to be when this thing reverses, in my opinion. So that bit right there, I said, I'm going to start looking for W formation longs. And here it was. So I'm on the 1 hour chart. It's easy to see on the 15-minute, but right here is the W formation. And that right there was the retest of the previous low of the week. That was the perfect entry right there. If you happen to get your entry off the low of the week, you're currently sitting at a 7.45 risk to reward off that one trade that happened overnight. And again, this is why it's important to understand where the liquidity is behind the scenes, because the market maker needs that liquidity to move price in the direction that they want it to go. Market makers don't care about Bitcoin. They're not emotionally tied to it. They don't care if it goes to 20,000 or 40,000. It's not their concern. All they're trading is liquidity. All they care about is where are your stop losses and where is your liquidation, because that's how they make their money. We can never beat the market maker. We are better off learning to trade like them. So again, if you're wanting to understand liquidation data, check out my video that I posted yesterday. Whilst you're at it, if you're enjoying this content so far, throw me a like, throw me a comment, hit subscribe if you haven't already. And now let's get into where we are now and what I think might happen next. Now, the first thing that immediately worries me on the 1 hour time frame is the wicks to the top that are going on right now. This is definitely a level where the market maker is testing the upside, but there's some trickery going on here. And if we zoom out, you can see that that is bringing us back to this level around here. So what these wicks are doing is recovering the imbalance that was in this big candle here. Turning on the VPVR, see how you've got that little gap there? That gap is an imbalance, and that imbalance was created by this fast moving bearish candle. So right now the market maker is trying to fill this imbalance here. When it spikes out like this is balanced. That's fair value. That's where people are willing to transact, as you can see, because we held this a whole weekend. But when price shoots up fast like this, shoots up or down fast like this, it causes an imbalance, and at some point that needs to get filled. So that's what could be happening right now. Our high of the week is all the way up at 43,400, which is a little bit too far for me to think we're going to go there, and there's a day trade on that today. So I want to actually mark out the high and the low of the day as well. Okay, now this is making better sense. So this line up here is the high of the day at 41,500. The low of the day is down at 38,500 because we did have that big drop before we pushed up yesterday. And let's go take a look at the 15-minute time frame. Okay, now this is telling me a little bit more. Remember earlier in this video I said when you see these wicks to the top side, they're trying to to encourage longs before reversing the market. At this point in time, they are definitely testing the market. So this zone right here is the boardroom right now. After having a push up, we are consolidating between two levels, and these wicks here are designed to induce longs, but also to stop out shorts, because people would automatically open short positions in consolidation after a move up, just thinking it's going to pull back. So market maker could be taking out shorts right now, and he could be trying to trick people into going long. This is the kind of area where you have to be really careful. And I'm going to switch to trading light in a second to see if we can see what's going on behind the scenes, to get a little bit of a heads up as to what may happen. Now, here's the thing. We do currently only have two tests to the upside. So I would not automatically say that price is going to reverse, but I also want to be cautious, because this area here, and here on the 15-minute time frame, that could be your level 1, 2, and 3 rise. And we may be in the boardroom right now, and what may follow the boardroom, if that level 1, 2, and 3 turns out to be correct, is we may get a couple more spikes to the high that don't do anything, just designed to induce longs. Maybe one more, maybe two, who knows. Then what will follow that, and what will let you know that the market is going down, is that we'll get an M formation. That's what we need to look out for, a reversal. However, this whole level 1, 2, and 3 rise could be just level 1 on a higher time frame. So we also have to keep an eye out for a breakout. Now, the problem is, if we do break out of this level, then you have to wait for a retest of the level, because look at the wicks above. So price would have to break out, come back to retest that level. That's your entry. Then you have a position up to the high of the day. So it is a little bit tricky price action right now. The EMAs are looking good. Price is still above the EMAs, so that's one tick for the bulls. Let's take a look at where the 50 EMA is on the 1 hour time frame. We are well above the 50. That yellow is the 50 EMA. That's a good sign. But the next one after the 50 that price needs to get above is a 200. Now we can see here, this is where price is struggling at the 200. So it's possible we get a pullback today. I would not short the pullback, just to be clear. My own personal, even though there may be an M formation on the 15-minute, if I was looking for a bigger move, which I'm always looking for a bigger move, then I would not short this pullback, because the rule is you never counter trend trade out of the level 1 rise. So if we have this W formation now, and this is the level 1 rise incomplete on the higher time frame that is now currently rejecting at the 800 EMA, you have to let this go now to wherever it decides to go. At some point in time, it has to come back to retest to confirm the W. So a W, we've got a W breakout. We don't have a confirmed W. The confirmed W comes after a breakout, retest, then we can expect continuation. So that may not happen here. We may go up to here before we get a retest, that takes us back up to the high of the week, or we may just drop from here. We may come all the way back to here to retest at 39,600. We may even just come back to retest the 50 EMA, wherever that is at the time. So what I would be waiting for now, there's no trade here because the risk to reward is terrible. You just have to have patience and wait for it to pull back. At some point in time, it's going to come back to meet the 50 EMA. Wherever that is, it's irrelevant. This yellow line here. So at some point in time, the 50 EMA is going to continue up, and price will consolidate or retrace. The 800 EMA will continue down like this, and they may cross. It's not dependent on the cross, but if you do get across, that's great. But as long as price retests the 50 EMA and stays above it, that's your entry. So now let's have a look at the heat maps and see, can we see any levels above price that may cause Bitcoin to pull back, and any levels below current price that may be the area they're trying to pull back to before we get the next level up. Okay, so bringing out the trusty old trading light, and immediately this level stands out to me. This red zone here at two levels, that's 40,300 and 40,250. That's the range, the $100 range, that if Bitcoin pulls back, people are willing to buy. But where might the pullback come? We now need to look above price. There's not a lot that's standing out. We do have 41,300 here. We'll probably need to grow a little bit more. And then around the 41,600 and 41,550 sort of level. This level up here is another one that's aiming super high, but it's possible that we could go up to 43,000 before there is any pullback. So we've kind of got this range here to worry about, this one up here, and then a possible pullback to hit. So the important thing now is to see where does that line up on our chart. Now, when we go back to the chart, you can see here, I swear I didn't move this. Rewind the video and have a look. But that point is exactly where the buy zone is currently. Makes sense that the 50 EMA will come up here. This is just confirming that that 50 EMA, wherever it ends up being, when price does eventually pull back, that's the area for continuation, as long as price stays above there. Also, the sell zone is up here. Again, just magically, it's at the high of the day. So if anyone tells me the market maker method doesn't work, then I don't know, we can't be friends, but this is magical and it's all working out. So what that does mean, however, is that price from here, it's possible we continue up to say the 41,300 to 500 sort of level before we get this pullback, which is probably going to feel harsh if that does happen. Then there's a chance for continuation, because now look at this for the next level that I showed you in Trading Light. Those Binance shorts, the higher one at 43K, well, have a look at that. That lines up just under the high of the week. Now, just remembering that those orders that are in the heat maps can get pulled at any time. So it is important to understand how to read heat maps and to not make a long-term decision based off what you see on there currently. But the way it's currently looking like it wants to play out is we may get a little bit of a move up. We may get that retracement back into this zone, and then we may get level 2 up to here. That would be ideal. So if you didn't get this long breakout, that's what I would be watching for. Again, as I mentioned, I would not short the retracement of a level 1 rise, because no guarantee we're going to get it. There are these wicks to the upside showing some weakness. So definitely my play of the day would be wait for a retracement. Make sure these buy orders stay here. If you don't have Trading Light and you're interested in getting it, there is a link to Trading Light in the description of this video. If you don't have it and don't want to get it, then add the 50 EMA to your TradingView chart and watch for the retest of that. Finally, if you did catch this W breakout, I caught this by a limit order very luckily, then I would definitely be watching this zone very carefully. If you get another third or fourth wick that looks like this to the upside, I would not be trying to hold on to this trade. Take your profit, pay yourself, especially if we then fall below this 200 EMA. There's just no guarantee that we're going to come down, bounce, and take another leg up. So if you are in profit, pay yourself. If price pulls back and then we get a bounce, you can always get back in. You'll actually make more money because you're not riding through this. This is giving profits back and then coming back to the same point you already were, then profit on top of that. If you were to take profit here in the boardroom, you don't have this loss, you take a new position at the bounce and you're profiting almost immediately if you pick it right. Guys, that is my play of the day. I hope you enjoyed this video. I hope it was educational. Don't forget to leave me a comment below, like and subscribe if you haven't already. And as always, have the most amazing day.